Good afternoon, traders, and welcome to this week's market session. And first of all, just like to begin by saying our thoughts and prayers are with anyone affected by the Brussels incident and attack this morning. It's a real shame that things like this still happen, but nonetheless, our thoughts and prayers are with you. In terms of the markets, it's been an interesting reaction in terms of what has happened. Typically we'll see a flight to safety, and we did see that a little bit in terms of pound selling off probably the most aggressively if you look at the daily chart here on the left hand side. And really that affected a lot of the cross pairs, and pound got really sold off the most, pound against Aussie. And a lot of you already know that we've been long on the commodity sector for quite a while, and matching that with the weakness of other pairs such as the British pound because of all the Brexit fears and the uncertainty has been a really good play. This was one of the trades actually we talked about a few weeks back in terms of this short position here, and that's produced a decent amount of profit so far. But pound was the one that's been really affected today. And looking at the chart here, I think a lot of the news got missed as well with what happened today. We had Moody's come out and suggest that the UK will probably be unaffected about a Brexit, and the British pound wouldn't be as affected as, let's say, the euro, for example. So I think that news has got swept under the carpet in light of everything else. And I think once those start hitting the headlines again, we could see more of a pound rally start to happen. It seems as though we may have put in a base on the pound, but it is still early days yet. Really we'll be looking for a break of this neckline here before we can initiate any more long positions. But nonetheless, pound is relatively weak, and trading that against other stronger currencies like the commodity currencies has been the favored trade of late. So pound Aussie, obviously intraday and end of day traders dream looking at this one. It's just been crushed over time. Same thing with pound CAD. We had the volatility this morning as well, markets coming off. I haven't I've used this as an opportunity to scale back on some of the pound positions, apart from pound Swiss, which has been a long running short position all the way from the highs here. So all the way from the highs here came into a strong level of resistance. Zoom out a bit there. It came into a strong level of resistance here, and that was the short position, and just adding into this on the way down. We are moving into some significant levels of support, so it is time to start banking majority of the position. But nonetheless, pound is looking the weakest of them all, and that's the one that you should be trading. Looking at euro, again, buyers have been in control, and we would retrace to this level of support, which found some good buying interest. I feel, given the price action, we're probably going to want to test these highs again, at least 1.1320 level. So I'll be looking for long positions in anticipation of hitting that level. Once we hit that level, then I don't know what's going to happen there. We're either going to break to new highs, or it's going to reverse on that. Interestingly, I would have thought we would have seen more of a flight to safety in the US dollar. We did get that initially this morning. If we look at the hourly chart, the market started to rise in the European session from 7 to 8, but now we're pretty much where we started. We've given back all those gains. So this is looking relatively weak, and in light of what's happened today, given the price action, it does look even that much more weaker. So I'll be looking at this level to hold at least up until this support level here. We may get a break lower. In terms of the calendar and what can affect this, it's looking a little bit light. It's not I haven't got a lot of news out this week on the US dollar. We've got core durable goods happening on Thursday, but generally speaking, we've got bank holidays for the Easter break on Friday and Monday. But we do have the the US final GDP on Friday, but given the fact the markets will probably be quite illiquid due to bank holidays, it may not be worth taking significant positions on there. So really, my view on dollar Swiss is the fact that it looks very weak here. So we could see some further downside, especially on an intraday time frame. And that's the key. When we're talking about where we see the markets going, we have to bear in mind what time frames we're trading. Sometimes all of my trading is very intraday, day trading focused. So I'll be in and out of moves looking at momentum, but from a longer term perspective, this does look weak. It doesn't look like a cycle to be put in a full stake position on because it's a very shallow retracement, but nonetheless, a half a position stake just in case if this does roll over on negative news, then that could be a pretty decent trading opportunity there. But really the focus this morning was on dollar yen. Overnight, we came into that strong level of resistance, touching the moving average here, that 8-period moving average, and we had that sell-off, nice pin bar or high test price action there, and you can scratch at about a 2-to-1 out of that, 3-to-1 out of that trade for the morning, and that's something we did this morning. And just bank the profits on that, as you can see here, 56,100 was a profit for the day, just on that one trade. But really the focus has been on the commodity sector, and we've been, for those of you who've been we've been trading this long, we called this long from the bottom here, and we've just been riding that wave higher. We had some phenomenal weeks on this, and again, looking at the what we call the seasonal average, we'll see that we're in for some more bullish momentum. So if I just stick this chart here from other platform, you'll see from the seasonal bias, we've got a strong trend yet still to go here, and I'll be looking to buy any dips, especially this level here at 0.7386. If and when we get down to that level, that will be the level to look for potential long positions and carry on trading this higher. In terms of weekly perspective, we've had some decent moves on this, and we've had we've had weeks where we've had a 60% probability of it trading higher as this week here. So, those of you who've been listening, really focusing on Aussie dollar and look to continue trading that to the upside. So really just buying any type of pullback. It looks like it's due a deeper pullback to the level we just suggested. So we're looking for long positions there. Some of you may want to trade it short up into that level, but I think there's other areas, there's other better markets to put your money into. Okay, so definitely Aussie is on the watch list. Kiwi is also very interesting because given the fact we had a rate cut, what happened after the rate cut? RBNZ, they cut rates, the market fell off a little bit, and then it actually gapped higher and ran all those stops. So, to me, it's actually a bullish sign, to be quite honest with you. It's not the sign that everyone was expecting, and I think a lot of people have been caught out on this, expecting the markets to go lower, test this level here. But I think maybe we're just due for a break to the upside, considering how it's reacted to different news announcements. We are in the commodity seasonal rally that we experience most years, so we are in the midst of that. But keep an eye on Kiwi, because at some point it's going to break through. It might not be now, but at some point it will, and then when it does break, people who were short here will be caught offside, and that's always the trade you want to take. You want to get the trade where you have that directional bias, i.e. it breaks out from a resistance level. People will be trading it long, but also so many people were short here. All of those people will be running for the doors, looking to sell those trades, which again further exacerbates the momentum to their upside. So keep an eye on Kiwi, given the price action and how it's reacted to news. a break may be on the cards. Okay, in terms of other commodity pairs, so I mean, dollar CAD has been the obvious one to be trading to the downside. A little bit more difficult once it's all the way down to these lows, but you're really looking for that significant support level to be tested here. So again, there's a support level here. If it does get down to that level, it's got to compete with this level first, which we just airbrushed last week. So the market would at least want to go and test this level. And at that point, well, it's anyone's guess whether it will bounce or break through. My guess is it'll probably just go sideways for a while, as most people have already positioned themselves accordingly. And then we'll most likely look for further direction from the US Federal Reserve later in the year if they will or will not increase interest rates. So keep an eye on dollar CAD, keep an eye on that level. I'll be looking for shorts on dollar CAD. If it comes up to 1.3210, it would be a good place to short. Another retest of this level. So I'll be looking for shorts to trade it back down to the 1.29 level or handle. And then at that point, I'll wait and see to see if it will break through or if we're going to get a decent bounce off from that. Okay, so keep an eye on dollar CAD. In terms of some of the cross rates, well, the cross rates have been also quite interesting. Aussie CAD has just gone sideways, really choppy. I know a lot of people are actually long on Aussie New Zealand because of the strength weakness play in terms of interest rates. Australia, the RBA didn't decrease interest rates, kept them whole, but the RBNZ did. So Aussie New Zealand has experienced that rally. But for me personally, Aussie New Zealand, I'll be waiting for this level to come down, which will put it in a nice ABC retrace. So if we get a retest of that one spot 1070 level, then that will be very, very interesting indeed. That's the level where you really want to be looking for some type of long position. Again, would I trade it short up until that level? Probably not. A little bit too aggressive for me, especially with these cross rates. Sometimes you don't know how they move, but this would suggest that Kiwi would at least go and test that upside resistance level, which is a very strong possibility. Okay, so keep an eye on Aussie Kiwi. Aussie Yen looked interested in the morning. A couple of guys called this from the room. Put in a double topped here, came down, put in his pin bar yesterday. But to me, the trend is not really intact here. It's just ranging in between these 2 points, resistance and support. I'd rather it just break out these levels rather than trade in between these levels. You can see on a 4-hour price action is very choppy. It's just not an ideal scenario for most people's trading methods. Okay, so really just moving on to find something that's a bit more trendy. And a lot of the crosses right now aren't in strong trends because we had that large move from the ECB last week or a few weeks ago, and really we're still trading within that bar. You can't really do much with that when you're still trading within this, and it's a daily candle as well, or daily bar, so it's not even a weekly chart here. So on the daily chart, we're still trading within that range. So you just need to wait for the market to break out. This is why I've been a big advocate of looking at the pound crosses, because that's where we've got strength. We haven't got the ECB that messed up the charts. We've got weakness in the pound, and we've got strength in commodities, and that's the play that we've been looking at, and that's what you want to be focusing on. A lot of the pound pairs. In terms of some of the New Zealand crosses, so for example, New Zealand yen, again going sideways. New Zealand CAD did look fairly interesting at these lows here, but again, it's depends on your trading style. Be looking for a short position up into short position if it gets here. So really, I think this week the focus has to be on just the major and minors, because that's where the volatility is right now. That's where the most obvious trades are. In terms of actually the indices, so indices, the FTSE has been quite interesting because it topped out here, and this week in the run up to Easter, there is a 65% probability that we're going to end negative for the week. So we're going to end lower than the 6200 level. So that will be interesting if the equity market does come down a little bit. That would suggest euro going higher. We've experienced that a little bit of that recently. We haven't had the sell-off that probably most people were anticipating after the events of this morning, but nonetheless, the week is still young. Even though it's a very short trading week, we have to look to the US market for some type of direction. So the main theme is this: keep looking at your commodity positions long. Still looking at a euro long to go and test those levels, and still bullish on equity markets, but looking for an intermediary short position currently where we are. And from end of day perspective, it's not as probably hasn't been as many opportunities for an end of day trader. With an intraday trader, there's been some really good movements around. And again, it's not about how many trades you take. So this morning, I mean, dollar yen was just one trade, but it amounts to a decent amount of profit. That's a 2-to-1, 3-to-1 trade there. So just had a question from the floor in terms of what's the preferred method for entering positions. And again, there's many different ways to enter positions. When I first started, my traditional way to enter positions was to look for your basic price action, so your pin bars, your inside bars, and trade off those levels. As I've developed over the years, I tend to put limit orders in now, so I don't have to pay the bid ask. And also the fact that the reward risk is a little bit better. So, for example, on the dollar yen position, if I make it a bit more clearer, we know there's a strong level of resistance here. Looking at the 1 hour chart, the market already tested that level of resistance, put in a bearish engulfing, and typically this is where your retail trader would get into this trade here, this bearish engulfing bar. They'll sell it at the low, stop loss at the high. That's fine. More often than not, because there's so many sell stops there, the market will almost always retrace. So really, I always wait for the market to retrace and stick my orders, halfway or higher. So in this instance, I got in around here, where actually the white line is. On the retest of that white line, stop loss is around here, your risk is defined, and there's your trade. Yeah, got out somewhere not at this low, but I think somewhere around here. It's about 2-to-1, 3-to-1 trade. So again, trading at the level and buying and selling just off levels is more aggressive. So when you are more aggressive, you're going to probably have more losing trades, as potentially not waiting for confirmed price action off the level, but the reward to risk would be higher. So that's always the takeoff, right? It's always the takeoff. How are you able to deal with losing trades will dictate what kind of strategy you look to trade. But nonetheless, just trading the engulfing here, it's fine. But for me, I always look for time frame correlation, and this is kind of what we teach everyone. So, for example, on a euro trade, if it comes down to a level of support or resistance, I'll be going to a lower time frame. So the 10-minute chart, for example, is my favorite time frame to enter positions. But I'll use the 10-minute chart to enter into a 60-minute or an hourly chart position, or I'll use the hourly chart to enter into a daily trade. So higher time frame for direction, lower time frame for execution. Of course, if you're not able to trade during the day, you can just check your charts at end of each hour, end of each, or every 4 hours, or at the end of each day. Again, you have to find a style that suits you as an individual. So there's many different ways to enter and exit a trade, but arguably the most important is actually the exit of the trade in terms of where you're going to get out. And in these kind of markets, you have to understand that, because it's a short trading week. For me, it doesn't make any sense to hold on positions. A lot of people got a lot of questions from the room in terms of, we took this short position on dollar yen. A lot of people were saying, well, why don't we run it lower? From an end of day perspective, if that ended negative, we'll run it lower. when we get a higher reward to risk. And the reality is, the name of the game is little and often. Okay, it's the best way to build a trading account over time is little and often, and that has to be the main focus. But it's all about having a focus. There's no point, going through every single currency pair on your list every single day. Look to match strength and weakness. We know commodities are strong. We know pound is probably the weakest pair out there. There's your strength versus weakness match. Okay, if you go to any of the pound crosses, they're going to be trending absolutely beautifully, and you can just keep hammering them down to the short side because they're essentially crashing. Okay, so sometimes the strength versus weakness play is not that obvious, and you just have to wait for the markets to adjust. But nonetheless, you're going to get your best trades by matching the strengths and weakness plays out there. But in the meantime, for this week, look out for the Kiwi trade balance tonight. Given the fact they've already decreased interest rates, we could see a further rally to the upside as that trade has already played out. So any type of positive news this evening on the NZD trade balance, we could be seeing new highs broken here. And if we do see new highs broken here, then we need to be getting on board with that and looking at break and retest trades or capturing some of that momentum. So watch that news and watch the US dollar news over the week. In terms of tomorrow, we've got British pound retail sales, but for me, still got to be a bear on British pound. I think, excuse me, given the news announcements and the fears and things like that, I'll be looking to buy British pound at this level, or at least seeing how the market reacts at that level. So one spot 41.46. If we get a retest off that level, it could be very interesting for a long position in anticipation of a further rally to the upside. So that is really one of the focuses this over the next few weeks or so. If the news is negative, then we can easily see that news, this level break down, in which case we may start seeing some further lows. But I think for now, that seems to be the better trade with the momentum that's happening. We tend to have a seasonal rally in the British pound from kind of March to May. There's some significant movement in the stock market, the FTSE 100 in the UK during April due to certain tax saving instruments a lot of people are investing, which affects the British pound. So we tend to have that seasonal rally, seasonal bullishness from March to April, and we've started to experience that. So it's started to play out, which is obviously a good sign, something that we want to follow. But now we just have to wait for the right time to enter the trade. So I'll be looking at that level closely to see if that holds, and I'll be looking for a potential long position off that level. So in order, so just a bit of a recap. The key is to match the strength and weakness plays. British pound looks interesting, at least to the short side, up until cable hits this level here, and I'll be potentially looking for a pound USD long position. But let's see how price reacts at that level. The best thing right now is to be long on commodities and to be short on the British pound. Euro looks interesting to the top side. It looks like it wants to retest previous highs, and dollar Swiss does look relatively as well. However, look out for big stop runs and liquidity runs in a lighter trading market this week and early next week. Moves can be exacerbated, or that can be very, very range based. That's it from me, ladies and gentlemen. Hope you found this of use. I can see your questions online, and I'll take some of those questions, no problem at all. But in the meantime, have a fantastic trading week, and I will speak to you all very, very soon.